Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Jiangsu ZENERGY Battery Technologies Group Co. Limited Annual Report. Jiangsu ZENERGY Battery Technologies Group Co. Limited offers a range of battery products and services for various applications. The company's product portfolio includes battery cells, modules, packs, racks, and battery management systems. These products cater to the needs of electrochemical industries, supporting the development of electric vehicles and energy storage systems. The company's comprehensive offerings enable it to serve multiple sectors, including those involved in the production of electrochemical products. By providing a suite of battery-related solutions, Jiangsu ZENERGY Battery Technologies Group Co., Limited, has established itself as a key player in the industry. Jiangsu ZENERGY Battery Technologies Group Co., Limited market capitalization of $23 billion is significantly larger than the average industry peer of roughly $3 billion. This shows that Jiangsu ZENERGY Battery Technologies Group Co., Limited holds a significant advantage in their industry. Jiangsu ZENERGY Battery Technologies Group Co., Limited trades at a higher price-to-earnings ratio of 23 times and a higher price-to-book ratio of 2.42 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 62% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the key factors that contribute to an increase or decrease in revenue. Revenue growth is primarily driven by several key factors, including a significant year-on-year increase of 57.9%, which is attributed to the expansion of the EV battery business and the growing demand for aviation batteries in manned aircraft. The company's ability to secure airworthiness certification and mass supply of battery pack systems has also contributed to revenue growth. Furthermore, the addition of new production capacity, including a 10 GWh increase by the end of 2025, is expected to drive future growth. In contrast, revenue decline can be attributed to several factors, including a decrease in delivery volume of S products due to production capacity constraints and a decline in nickel cobalt manganese ternary materials revenue. The company's energy storage system revenue has also decreased, which may be a result of the aforementioned production capacity constraints. Overall, the company's revenue growth is driven by its ability to expand its EV battery business, secure new certifications, and increase production capacity. Conversely, revenue decline can be attributed to production capacity constraints and declining demand for certain products. Net income experienced a significant surge of 788.4% from the previous year, with an even more substantial increase of 99.3% from RMB 700 and 48.4 million in 2024 to RMB 1,491.4 million in 2025. This substantial growth indicates a notable improvement in the company's financial performance. The profit margins also underwent significant changes. The gross profit margin increased by plus 3.8%, rising from 14.6% to 18.4%. Furthermore, the EV battery gross profit margin saw an increase of 3.7 percentage points, from 15.2% in 2024 to 18.9% in 2025. Additionally, the S products and others gross profit margin rose by 1.4 percentage points, from 8.6% in 2024 to 10% in 2025. The reasons behind these changes are not explicitly stated, but can be attributed to various factors such as shifts in market conditions, improvements in operational efficiency, and effective cost management. These factors likely contributed to the company's enhanced financial performance, resulting in increased net income and profit margins. The company's financial performance has shown a significant improvement in recent years. One of the key indicators of this growth is its ability to generate positive operating cash flow. This means that the company is able to produce more cash than it consumes, allowing it to invest in new projects and pay off debts. According to the provided information, the company's operating cash flow has been consistently positive, with a notable mention on page 19 and page 23 of the financial report. Furthermore, specific numbers are mentioned on page 20, indicating that the company is expected to generate $437 million in operating cash flow by 2025. This projected increase suggests that the company's financial health is improving, and it is well positioned for future growth. Management is optimistic about the company's future prospects, outlining several key strategies to drive growth and innovation. The primary focus is on expanding the energy storage business through large-scale sales and achieving full-path coverage in the manned flight sector. To achieve this, the company will invest heavily in technology R&D, prioritizing cutting-edge products and pioneering new technologies. In addition to these initiatives, management aims to enhance production efficiency through AI-driven technologies and increase capacity by 30–60% per year for newly built production lines. The company also plans to launch new battery products for various vehicle types and uses, as well as add new capacity in energy storage applications, including long-duration energy storage. Furthermore, management emphasizes the importance of innovation and product development, seeking to drive business growth through these efforts. The company will also strengthen relationships with existing customers and establish business cooperation with new ones, while actively pursuing new business development opportunities. Overall, management's strategy is centered on driving growth, innovation, and expansion across various sectors. The company's financial history reveals a notable trend. One significant aspect of its operations is the payment of dividends to shareholders. This indicates that the company has prioritized returning value to its investors through regular dividend payments, rather than retaining profits within the organization. By doing so, it demonstrates a commitment to shareholder satisfaction and wealth creation. That concludes the financial summary for Jiangsu ZENERGY Battery Technologies Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.